I saw this breaking right before we went to film it. It felt like one of those seminal moments where it's the first of a new era.
You are listening to the AI Investor Podcast from 24/7 Wall Street. On today's episode, we look at the market's reaction to tariffs, Zuckerberg continuing to go large, market news, and NVIDIA H20 GPUs back on the market in China. All that and more is next. Eric, great to see you again.
Yeah, it's good. I'm outside in the lovely 90-degree and humid weather of Washington, D.C. Hopefully we get some bird chirps in the background, maybe some trains blowing their horns. But it's been a great week in the market once again, despite tariffs, as we'll talk about, and a lot of excitement in the AI space, as you teased at the beginning of this podcast.
Certainly no shortage of AI excitement. One of the things I love about investing in this space right now is just how dynamic it is. Before we jump into today's episode, just a couple housekeeping items. You were going to chat about something at the end for our listeners about Investicon. So I just want to mention, stick around for the end, something that you'll be discussing, something you'll be doing in a few weeks here. And also our listeners might know we're a little bit out of sync on our episode cadence here. One of those reasons is we wanted to try and get an episode out to our listeners quickly. We know we've been on the longer end in between our episodes lately. We're trying to get back to that every 2-week cadence, but I'm going to be traveling. So we wanted to get this one out a little bit ahead of that schedule. So with that housekeeping in order, Eric, you alluded to it. The markets continue to seem to just be shrugging off so much of the market, like the volatility out in the market, tariffs being one of the biggest elements. And you and I have talked a lot about that, both from the diffusion rules that came out of the Biden era and then the tariff rules that now come out of the Trump administration. There's been so much volatility around AI, and yet it seems to be the market seems to be shrugging it off. We're hitting all-time highs. What's going on?
Yeah, and I want to extend this housekeeping note to say, number one, you are going to one of the most beautiful places on earth, Isle of Skye. Very jealous. I hope you enjoy that. And at the end, we will be talking about Investicon, which is an event I will be at near there in Dublin. So once again, everyone should stay tuned. A second housekeeping note is that we had previewed earlier in this podcast months ago that we were looking to hire someone to kind of spruce up the podcast, turn into video form, and we have made that hire. So hello, Brad, watching and editing this video. And also, if you're able to watch this in channels like YouTube, we should have a nice upgrade where you will be able to see my porch outdoors. But yes, so that should be exciting. If you're following us in areas like YouTube, we plan to make investments. So I want to note that. Now, let's get back to the market. I was on my own trip this weekend, which was to rural West Virginia, and there's very limited reception there. And all I heard was, did you see this new Trump tariff? Did you see this new Trump tariff? Did you see this new Trump tariff? And I was expecting to come back Monday morning, see the markets off 2 to 3%, something in that range. We saw quite the opposite. It's been a relatively strong week for stocks. On Tuesday, we'll talk about this a little bit more later in the episode. Just about every sector is down 1 to 2%, but technology as a sector was up nearly 1%. That was due to particular news with NVIDIA. But Austin, it is just, we are continuing on this pattern as we record this episode in the middle of July, 2025, that, geopolitical news in many ways continues to stay very murky, I would say you could call it. Inflation continues to rise off the lows that we had seen earlier this year. The stock market is incredibly resilient, and it is leading to a situation that, as we've noted, feels a bit like a carbon copy of early 2021, where you have a lot of very popular stocks kind of gaining a lot of appeal in financial spaces like Twitter. And many of them, as I know you were sharing some stats with me before the episode, are trading at relatively historically expensive ratios.
Yeah, we had talked about this in our last episode. And one of the things that struck me is we're seeing a lot of growth is what is valued now, but it's sort of sector agnostic. So if you look at some of the popular names right now, we're seeing price to sales ratios that are kind of crazy. So Rocket Lab, 46 times price to sales, Palantir, 113, Robinhood, 27 times, and Tempest AI, 30 times. Now, just to be clear, that's price to sales, not price to earnings ratio. And what strikes me about this current dynamic is just the breadth of the multiple expansion. It's not like we're seeing multiple expansion in just one sector, just AI. It's just growth, right? Like growth is getting a multiple expansion into an extremely high level. To me, that just means we really need to dial up our divining rods and how sensitive we're being about investments we're making in this market. As you said, this echoes of 2021, and for our investors who are not following some of these companies then, the downdraft from that multiple expansion was savage. Now, a lot of those companies have since come back. So, it's never a bad time to invest in a good company, as we like to say. But given some of the price to sales ratios we're seeing in today's market, broadly speaking, I think you need to be a lot more gingerly with where we're placing our foot and where we're putting our capital. The breadth of the valuation extension is what has me slowing down a little bit.
Yeah, and the wheat definitely separated from the chaff in 2021. As you noted, many of the companies that rose and fell did come back that truly had excellent businesses. Palantir is an example of that, for example.
Mm-hmm.
You are seeing some stocks now seeing historic rises from kind of the bottom. AppLovin, Carvana. If you've looked at Carvana stock chart, my goodness. But
Lemonade.
Yeah, and we will see, I believe, similar dynamics today. That it's still a fine time in the market to be buying excellent companies, but the risk does rise. And as I've noted throughout our entirety of this podcast, I avoid things like buying companies that add AI to their name or in often the trendiest spaces. Right now, since CoreWeave's IPO, there's been a lot of positive developments for CoreWeave, but people are fanatically looking around for kind of secondary plays off that. Suddenly Iron Mountain's become one of the hottest stocks in the market. So, it's just, we will tend to avoid those when we're picking stocks. We're not afraid to be somewhat speculative in very small positions, but our goal is to help people build portfolios that make them money and help them sleep at night. So I am never going to chase in these moments. It's easy to chase. It's easy to look at these stocks and go, oh, this one's up 200% in the past month. But that's just how we'll never invest in this show. And, if people want that to get their kicks, they can look other places. But we are looking to buy enduring companies that will win across this entire cycle.
Speaking of buying winning companies, let's take a look at the portfolio real quick. Your average recommendation is up since our last episode. I think an additional 25%. We were up about an average, 21% in the portfolio when we last spoke. What are you seeing today?
Yeah, as you noticed, just the average pick's now up 25%. We're seeing continuing strength across the portfolio. The biggest news this week, as we'll cover shortly, is just a lot more tailwinds heading towards the companies in that data center centric buy we had bought initially. That's the companies that own the networking equipment and the chips that go into the data center. So there's just been a lot of tremendously good news for these companies, and it's really reflecting in the rebound in current share prices.
Mm-hmm. And you had mentioned Iron Mountain there. Iron Mountain, a company that famously does data destruction and physical document management, but they actually have a little bit of a booming data center business.
Yep.
One company maybe you and I could talk about, not on today's episode, but I'd love to explore, is like Digital Realty Trust, ticker symbol DLR. They've largely sat out this AI boom, and I'm just curious if that's what we see there. But there's plenty of other news to talk about. But if people are looking for maybe some data center companies to go spelunking around, Iron Mountain and Digital Realty Trust are interesting ones to start poking at. But let's speaking of data centers, maybe this is the answer for why DLR is not doing as well as we had hoped in this AI rush. Some of the mega tech companies are just building their own data centers, right? And they're not going outsourced to these REITs. So Zuckerberg announces a 1 gigawatt and 5 gigawatt data centers. The scale of this is absolutely unfathomable. And I just want to be clear. 5 gigawatts is as much power as a large city takes. And just to put this into context, Dallas consumes about 3 gigawatts, Chicago 3.5. There are only 2 US cities that I'm aware of that consume more than 5 gigawatts, and that's Los Angeles and New York. So when we are talking about 5 gigawatt data centers, these are unbelievably large. Talk to me about what this announcement is.
Yeah, Mark Zuckerberg, he did an announcement on Threads talking about these data centers, and he put a picture of the data center overlaid over top Manhattan. It looked like one of those ships from the movie Independence Day kind of coming in to destroy the city. As you noted, the scale my goal today, talking about this news, is really to frame up this scale for listeners because it's easy to see this news and just we've had such a cavalcade of good news and announcements. To be able to understand just the scale we're working with is very difficult, but it is going to be phenomenally important to understand what's going on in artificial intelligence right now. So let's talk about what this means in terms of dollars and cents. NVIDIA CEO Jensen Huang, he said, and I'll quote him right here, I'll read the quote, every gigawatt is about 40 billion, 50 billion of revenues to NVIDIA, right? Every gigawatt of data center is about 50 billion, roughly, let's say. So every gigawatt is 50 billion. And so when somebody is talking about 5 gigawatts, that math is pretty clear. And that's the end of the quote. So if you take Jensen Huang as face value, well, look at these announcements from Meta. They're going to be the first to build out a 1 gigawatt data center. That's their goal. I believe it's named Prometheus, which again sounds like some from the movie. I think that's an alien movie. It's like Alien Pro. So, we're definitely getting pretty sci-fi here. And then their goal after that, the one that looks like it's the size of Manhattan, that one is 5 gigawatts. So if you take NVIDIA at its face value, that is $300 billion worth of addressable market to the company. Now,
just from Meta,
just from Meta, just from this current build out.
Right.
How much money was NVIDIA making top line in revenue a year and a half ago in 2023? It was 60 billion. Just the first data center is the entire size of NVIDIA a year and a half ago. And again, the math is easy. If you do 50 billion times 6 gigawatts, that's 300 billion just from Meta alone. This is mind-boggling stuff. And of course, Austin, the other thing, that's an addressable market to NVIDIA. Companies like Broadcom. Broadcom's been working on a custom chip with Meta. This is very likely going to benefit them in a significant way. This is going to benefit people downstream because when we look at Meta months ago, if people go back and listen to the podcast after DeepSeek, we were talking about, is Meta going to cut its CapEx for this year?
Just ramping.
And we had said, we believe that wouldn't happen. And then they've announced acceleration. I believe it's to 72 billion this year on the high end. They'll probably go north of that. These two data centers, when you do the math, it's roughly 10 times what they're going to spend this year. So, Austin, this is ambition on the scale of Stargate, maybe even more, which was in itself huge ambition. And, I think we need to frame this up with what is happening and why Zuckerberg is making this very real all-in bet around artificial intelligence. I was watching an interview with him yesterday. It was for the website, The Information. And Zuckerberg said he believes that there is a very real shot in the next 2 to 3 years we'll have what's called artificial superintelligence. Now, I know we've talked about artificial superintelligence in the show, but it is worth mentioning artificial intelligence simply will be the biggest event in human history. I don't think many people even watching this show, let alone the general populace, have any conception in their minds that we are on the precipice of something that could be bigger than the invention of fire for whatever 12 people first were able to capture that. Electricity, cars, everything throughout time that was epochs in human history, we are maybe on something of that level. And that is what Zuckerberg is seeing. So, what does ASI mean? It means artificial intelligence is likely self-recursive. It begins improving itself. Mm-hmm. It means that we probably have breakthroughs in scientific domains that we didn't imagine previously, fusion power, healthcare, to just an unbelievable degree, and almost certainly means that we will see a faster acceleration in the need for compute than anything we've even talked about before. So, Austin, I'm not here to say that ASI is a certainty. Far from it. We need some breakthroughs before we could talk about breakthroughs in actually the actual AI algorithms before we could talk about That being the end game here. But, imagine if you're Zuckerberg and believe this, it would be like being a human and being the only one to have heard from an alien that they're coming to Earth in 2 or 3 years. How would you change, or what would you do? Like, this is the scale of change that someone like Zuckerberg is seeing. So let's take this away from, kind of sci-fi, pie in the sky talk, and let's talk about what it means to investing.
Yeah.
Since the beginning of this podcast, we've said, well, the conventional wisdom is AI spending is in a bubble. We've said it's actually economically supported far more than people believe. Facebook, for example, or Meta, I should say, I've broken down the numbers, and their ROI on AI just from improving their products was running at something like 16 to 17%. They were seeing the majority of their revenue growth from AI. It was very positive spend. At this point, Meta is taking spend beyond the rational economic argument. This is, in a way, a bubble in the sense that if ASI doesn't happen within a near-term time frame, they will almost certainly be overspending. But that being said, if Zuckerberg and to an extent Sam Altman, this becomes a belief that is common across technology, well, what are the next implications? We've already seen an announcement of a similar size data center from Abu Dhabi in the Middle East. Think about the implications of national security, of almost every single country feeling like computing is essential to their defense. How much do countries spend right now on national defense? How much would they spend on computing if it was the lifeblood of the economy? And you begin to see the truly outsized rates where within 5 to 10 years, the economic paradigms of the world we live in are completely different from today. And that's the future Zuckerberg's betting on. So Austin Altman is to some extent, Sam Altman, the CEO of OpenAI, he's making this bet. This is Zuckerberg planting his flag in the ground on a belief system that is so outrageous, it's inconceivable to 99% of people you talk to, 99.9, and it is happening. It's real. In a way, it's a more fantastic future than I would have imagined when we started this podcast less than a year ago.
When we put it in those terms, suddenly the name Prometheus for this data center makes sense, right?
Yeah,
bringing fire down to the people. I have to say, Silicon Valley is on a naming roll right now. I mean, Facebook is a kind of lame name. Google's a kind of lame name. But like in the last few years, we've gotten Anduril, we were getting Prometheus, we're getting Stargate. These grand, ambitious sci-fi Greek god namings. I'm enjoying this new era of company naming, even if the Lord of the Rings aspects have gone a little far. But let's. I want to react to some of the things you said there, and then move on to our next topic. We're talking about world paradigm shifting technology here. We also want to position ourselves to benefit. Some of the names you mentioned there, Broadcom designing special chips. Let's also remember that Google, where their TPU processor is a client of Broadcom, and they're working together on this chip. So Broadcom can benefit from multiple players dumping capital into this space. And I also wanted to put into context some of the things that you had said, about these companies already seeing economic benefit from AI, even if people in the world are like, well, I still get my coffee at Starbucks from a barista. Where's AI? How about this? Google, 25 to 40%. I've seen estimates in both range, but 25 on the low end, 40% on the high end. Of what percent of Google's code is currently written by AI. The internal cost savings these companies are seeing are in the tens of billions over multiple years, which already just underlines the economic value of this. And that's before it sort of jumps out of Google or Meta and starts being injected as sort of the substrate layer in our entire lives. So there's incredible economic benefits. And you had talked about something which was these AIs being able to train themselves. And if that sounds really bizarre in sci-fi, I would remind people that we already started to see a version of this late last year in 24, when AI models were running out of data to train on, and we had this sort of synthetic data breakthrough where AIs were creating more information to train themselves on, and they were able to break through some of the testing barriers they were bumping into. And that just accelerates with larger clusters and faster GPUs. that recursive self-training just becomes more and more viable. But let's move on to our next topic because it is a very interesting one for me. And that's NVIDIA H20 GPUs are back on in China. And I just want to set the table real quick. And then I have a follow on question at the end. Um, you and I had talked about this on a prior episode and the challenge of an east-west tech stack, right? And there was sort of this Eastern tech stack coming up out of DeepSeek and this Western tech stack with NVIDIA and ASML and other Western nations. And the reasoning that we had heard up until this point is that we kind of wanted to freeze China out of the AI race by pulling back some of our best technology and limiting what they were able to access either through tariffs or other regulations. But as you have pointed out in the past, that just gives China every incentive to engineer around it. So now I'm starting to hear a bit of a changing tune, which is maybe we should be giving China some of this technology because we want this built on a Western tech stack. We don't want to give them their own incentive to develop their next NVIDIA out of Huawei or their new lithography. So what's going on with this NVIDIA H20 sale? Fantastic news for NVIDIA in the short term, but I would also just love to hear from the big picture. What does this mean?
Yeah. So this news hit the markets on Tuesday. And as I noted earlier, it was a huge, if you're looking at market returns, there was actually a huge divergence. One of the biggest ones I've seen where healthcare, financials, most sectors were down 1, often 2%. Technology, largely due to this news, almost exclusively was up 1%. NVIDIA itself, as we film this once again in mid-July 2025, is to an all-time high of more than $170 per share. It's the first $4 trillion company. The accolades on size continue to pile up. Now, how big of a deal is this for NVIDIA? Well, NVIDIA had reported in their last quarterly earnings that these restrictions that kept them from selling H20s into China were going to cost them about $8 billion in sales in the next quarter. A safe assumption. This adds $5 billion quarterly, maybe up to $25 billion annually. If AI keeps growing, that number grows as well in terms of what it means for NVIDIA. I think for growth rates for NVIDIA, next year takes a growth rate from, I think Wall Street's currently seeing on 25% growth for NVIDIA next year. I think this takes it 30, maybe 35% growth. So very material. You can see why this has the impact it has on their share price. There's another factor in this that NVIDIA reportedly has 1 million of these chips sitting around. So they're going to be able to sell them. They had taken an inventory charge on them. And they will start working on creating a next version, which is taking a Blackwell version that's compliant with these kind of regulations to China. Now, the winners of this, obviously NVIDIA, right? That's obvious. AMD is going to start selling their Chinese compliant chip. Broadcom had major contracts in China that, it should be able to have new pathways for sales. Taiwan Semiconductor, an obvious win as the arms dealer to all these companies. Another stock that, we talked about last week that we had recommended, but weren't able to add to the portfolio, SK Hynix. That's a logical beneficiary. And we could go down the road, companies like Cantech. It does help a pretty wide swath of companies. Now, here's the kind of question you're getting to. What's the big picture here? What's going on? The reports I've seen, Austin, is essentially that the H20 was being used as a very literal bargaining chip in negotiations with China, specifically around rare earth materials. So as part of getting some of those concessions, they made the H20 available. Looking more broadly, this isn't just NVIDIA. This is kind of a broader thong. Synopsys, another portfolio company, they had bought a company named Ansys. It was held up exclusively by Chinese regulators. And wouldn't you know, within 24 hours of the NVIDIA announcement, that goes through and suddenly Synopsys is up 19% in the past month. So the big picture here is, overall with Trump, our expectation, love him or hate him, that the administration has a lot of influential people who were very focused on AI. And I think it surprised a lot of people when they were being tougher on it at the outset. But the question was always, is this going to be a total freeze of China? As you had mentioned at the start, like just two disparate tech stacks. Or are we going to be more strategic, use this as a negotiating tactic, but keep China kind of, like a little bit of a crack addict needing parts of the US technology supply chain, which you're getting with something like keeping these Chinese companies in the CUDA ecosystem and continuing to feed them. And the other factor would be, are we going to see lower regulations, and what do lower regulations in AI look like? We'll get to that aspect in a little bit on the podcast, but I think we are now seeing what they are doing is they are strategically negotiating. The H20 was a chip to play. They are going to continue allowing selective technologies into China. I will note selective can hurt some companies such as ASML reporting this morning. We could talk about that more if you want.
That was where I wanted to take it next, actually. So
Okay.
let's pivot there a little bit.
Sure.
And also, well, actually, I would actually also remind people, remember that the DeepSeek moment, although that was very much like seen as sort of a Western tech stack moment, was still trained on NVIDIA chips. So although we're in the early phases of this fork in the road of East-West tech stack, our most recent sort of dominant leapfrog, maybe not leapfrog, catch-up moment in the Chinese tech stack was still built on NVIDIA chips. And there is still a good chance that with the loosening of these restrictions, China will still be built on Western tech based on that moment. But I was curious, in ASML, notably absent from the portfolio, we've called this just one of the most interesting AI misses, given that all of the megatrends we're seeing, ASML really weak last few years, best in class technology on lithography, down 10% as of the moment of this filming. Is this a buying opportunity for ASML? And the reason I ask is NVIDIA was not able to sell their chips into China, but now they are able to. And I'm putting you on the spot a little bit. I want our listeners to be clear. You're not, you're not going through the conference call in real time here. But if we see this sudden reversal in East-West tech stack regulations, and now NVIDIA can sell their chips into China, does that sort of flexibility ultimately flow downstream to ASML, or is the horse out of the barn and China's saying, whatever, we've been building our own lithography for 18 months, we're going to stay on this train? Do you see this as a buying opportunity for ASML, or is this truly just a company that is always going to be stuck between two great powers?
Yeah. First of all, a little plug here. We did have a live earnings blog, which I was hosting this morning for ASML. As you know, they are on their conference call right now. I am not able to attend that. If you're hearing some dings in the background, I live next to a playground. Some kids are banging on it. Hopefully that is not too intrusive.
They're cheering on the stock picks. They want to hear whether or not ASML is a buy.
I'll have to go over and yell at them like an old man once this finishes. But yeah, so ASML, in the actual Wall Street Journal article talking about the H20 restrictions being removed, they had said the Commerce Department has prepared harsher restrictions on China, including limits on equipment needed to make the semiconductors in case trade relations sour again. So what is the primary reason that ASML is down 10%? It's because in their earnings, they said they would not confirm growth for 2026. Right. Why can they not confirm growth? Well, that sentence I just read out loud, because they, as you know, we've got these negotiations, and NVIDIA goes from being held over a barrel as the literal negotiating chip. Now ASML becomes the negotiating chip. Is this a company I think will be successful over the long run? Yes, I still do, but have I said since nearly the outset, we had previewed in the first episode, but then we didn't add it because of these geopolitical fears. Do I continue to be concerned about what the near term looks like for the company, as it needs to? They had just become very reliant on China, and they need to get towards growth. They need to kind of digest this period of no growth. I think it is a little fraught. So, this is just, again, where the details matter, and why we've avoided some areas of semiconductor equipment, which was traditionally been an incredible investment space. Is just there are winners and losers from this new Cold War. And I believe for the foreseeable future, ASML continues to be, they're like Princess Peach kidnapped in the castle. They are that thing that we can always hold over. China's the hardest to replicate Western technology, and that's potentially beneficial for other companies that get advantages, but very poor for ASML itself.
Mhm. We also should be clear, ASML is not a US company, but at the end of the day, the US is going to call the shots here on regulation. It is that economically powerful. I just want to make that point for our
Yeah,
listeners
yeah,
who might be wondering.
sure.
Um,
And they have a lot
you,
of employees in the US as part of the reason the US can do this.
right, right. So you had talked about uneven AI regulations, ASML on the downstroke here, maybe NVIDIA on the upstroke, but there's actually some new changes that came out of the big, beautiful bill that look like phenomenal tailwinds. And you and I sort of had to, blink a couple times to confirm we were reading this correctly. But there's a major change in the tax code that allows for different R&D expensing that could be enormously like earnings accretive to the big tech companies. What is this change?
Yeah, so the big, beautiful bill. This is actually a wonderful place. If you've been thinking about how do I use AI and kind of my daily life, like going to O3, ChatGPT's reasoning model, and saying, can you just think through this how the big beautiful bill is going to impact X, Y, or Z? In this case, AI taxes. It's a wonderful use case for artificial intelligence. So, I had pumped it through, and what I found was section 111002, which is what you referenced. It lets companies take R&D amortization, which typically is done over a 5-year lifespan, and do it all within the year, which is to say, as Facebook is hiring all these researchers, as long as they're in the United States, it becomes essentially a powerful tax weapon. This might be, I don't think this is why Zuckerberg's taking these actions, but I'm sure it is a positive that they have some knowledge that this is coming, and it impacts plans and how you want to hire and approach these markets. And the other area that we're looking at is extending domestic credits for producing these fabrication facilities and advanced technology in the United States. We've seen Taiwan Semiconductor reports out that they're going to continue expanding aggressively in Arizona. What's a key reason for that? Well, you need to not only build your fabrication facilities in the US, you also need US supply chains, which comes back to why NVIDIA is moving its supercomputer supply chain with kind of press release of 500 billion. They're moving it there. And as we can talk about in a minute too, this has huge implications for areas like rare earth materials and companies wanting to supply, create a US supply chain. So Austin, earlier we had talked about, you were kind of starting to talk about low risk ways to kind of play these markets. You look at this, it's a carrot and stick approach, right? Trying to give incentives to move back to the US. And if you don't move to the US, you're going to be punished. One company I had done in a presentation to anyone who'd be on the Motley Fool's mailing list in late April. We did a presentation around this realignment and companies that are going to benefit from it. And the company I had talked significantly about in this was a company in MCore, its ticker EME. It's up 63% since early April, 35% since the presentation. And what it has is it's a specialty in high technology build-outs, things like fabrication facilities, but also the energy needed for AI build-outs. And it's a company that's going to benefit. It's a different kind of risk profile to a lot of the AI plays people have in their portfolios. And I want to be fair to the people who bought this product and not give away all the stocks, but I'll say the other two stocks, which were micro caps along this kind of trend of reshoring US high-tech manufacturing. One of them, when I checked this morning, is up 130%. The other is up 108%. So, it goes to show how dynamic investing across this spaces. I would love to have had some of these ideas. As I know, we have to be fair to the people buying these other products. We have disclosure rules. But, this knowing that these kind of changes are happening are very investable ideas, and I think is going to be a continuing storyline across the next 3 to 4 years.
Speaking of storylines, I wanted to, as we sort of move down like the fundamental requirements of what things take to unleash, super intelligence. One of the big ones that the markets have reacted to that we have not yet invested in is energy. So energy stocks have been on a tear. I think in 2025, NRG Energy and GE Verona are two of the top 10 performing stocks. We had seen what Vistra Corp and nuclear stocks, Okla, Sam Altman's company, have done fantastically well the last few years. What is the what does the input look like here? Talk to us about the energy demand that we are going to need to unlock. We're talking about these 5 gigawatt data centers that Zuckerberg is talking about. That's not the only one. There's going to be multiple of these from multiple companies. The energy demand is going to be absolutely phenomenal. And China very much is outpacing the US. I think I saw a statistic that they're adding a US's worth of energy consumption every 18 months. And that's probably accelerating with some of their work, like the new dam that they're working on, and other nuclear facilities that they're approving. So energy, this is not a new thesis that we should be investing in energy to power AI. What I'm curious in is where are the opportunities that we see them? Because so far it's been absent from the portfolio.
Yeah, you think about this new Cold War, this great strategic game where people play to their strengths. The U.S. strength is, along with the Western nations, as we've talked about, it's not just the U.S., an existing technology leadership. It's probably the most dominant industry for this, not only the U.S., but its allies. China's key advantage right now is likely boils down to power. What was their solution in the absence of NVIDIA chips? Well, they were going to have chips from Huawei, which were horribly inefficient from a power perspective. But if you've got enough excess power, you don't need to really worry about your efficiency. And the greatest weakness of not only the US, but also a lot of its allies, especially in Europe, is an inability to build more of this needed power supply. Yeah. So this is going to be the flashpoint.
A regulatory inability. I do want to be clear. We know domestically, the U.S. and Europe absolutely have the ability to build nuclear reactors and solar farms and turbines. And France, famously powered by a lot of nuclear energy. It has so far been a regulatory inability. It is a willingness, not a technical limitation.
Yeah, and this is an endorsement of the Trump administration. Again, we are apolitical on the show, but if you're excited about them and you're a tech investor, at the top of the list of reasons why you'd be excited definitely had to be the regulatory reform in power. This is unlocking one of the most strategic areas. And the energy secretary for the Trump administration this week said the coming years will be huge in nuclear. Austin, this isn't a space that we've invested in. There's been a lot of frothy stocks, very expensive. But I think we probably do need to put more research into it. I believe in the third episode we ever did in the podcast, we did a deep dive on this energy issue. We ended up buying more of the data center, companies powering a lot of the electrical supplies into them, which have done fine, but not the returns you talked about with stocks like GE Vernova that do things like gas turbines. And just today, news was breaking as we went to film this. Trump's in Pennsylvania, trumpeting some massive infrastructure projects. And so when we look at ways to kind of skin the cat on this opportunity, there's going to be opportunities in energy itself. There's going to be opportunities across that entire supply chain. As you noted, there are the actual power companies, which some are more advantaged than others. There are things like the turbines for the, getting power to the data centers themselves. And there's going to be areas like who finances how expensive this stuff is. I believe Blackstone is financing $25 billion for the project announced today. One stock, we've been looking at, I had just done a presentation on this to Motley Fool members, was Brookfield, which, as you noted, is like a rushing nesting doll. But one of their assets, Brookfield Asset Management, does massive deals for power. They actually have direct exposure to data centers. So, this might be a place that, as we noted, with stocks at all-time highs, maybe we will look at adding some private equity, companies to the portfolio, because it is getting so expensive to finance these areas that a very limited amount of companies can, play in this area, and it's lucrative. The other area that's really interesting, this kind of great battle going on between the US and China. Earlier, I'd mentioned H20's availability. being apparently relying on a deal for rare earth minerals. Well, there's a single stock that has a rare earth mine in the United States. That's
That's
MP
right.
Minerals. And what's happened to them in recent weeks? The Department of the Defense has become their largest shareholder in a multi-billion-dollar deal. And Apple even directly invested in them to get domestic supply. So MP, it's become the story stock in many ways of 2025. And, this is another area that we're going to look at. And as a little spoiler, if robotics take off, there's an incredible amount of rare earth materials in the robotic supply chain. So I don't think this is necessarily a storyline that's just ending with AI. So Austin, I know I'm throwing out a ton of investing ideas, and we're gonna get to selling off and rebuying, but it's really, hopefully this is illustrating how deep the well is on opportunities that are going to benefit as this massive spending wave continues to form.
I love that. And I do want to, just take that point and extend it for our listeners here, which is our portfolio is fully allocated. That does not mean the ideas are going to stop coming. So just some of the things that you and I have talked about in these last few episodes that are huge opportunities that, where more research needs to be done before we place investments. But there's healthcare, there's robotics, there's agentic AI, there's power, there's more data center exposure. So these are all potential opportunities. We're not saying go put money in them now. That's where you need to go do the research and find the companies and understand the trends as they're well positioned. But just like when you're investing in internet stocks at the dawn of the internet, it wasn't just buy Amazon or buy eBay or Oracle at the beginning. Because those were the best stocks available at the time. Now, granted, you would have done exceptionally well, but along the way, as the industry matured and new capabilities came online, you could have invested in Uber, you could have invested in these other companies that were enabled from this tech layer of connectivity. And we are going to see that in AI as well. New opportunities are going to be presenting themselves that are more compelling than the opportunities you've already allocated to. So at some point, our listeners should expect we're going to be selling positions to reallocate into these new areas. And boy, are there some exciting spaces there. And our listeners will know I am most excited about robotics. Whenever we get to our robotics investments, I am all in.
It's coming. It's coming.
Eric, that was most of our news today, but you wanted to chat about one thing real quick, which was also cybersecurity, which that is a whole other area of potential investability. You do have Cloudflare in the stock. It's been a fantastic pick, by the way, or in the portfolio. It's been a fantastic pick, but there's more ways to play the cybersecurity space in the AI world. And you just want to talk about this news item before we closed out. What was going on with the AI agent attack?
Yeah, this is just new from Google, and from their security team, they said their AI agent Big Sleep helped detect and foil an imminent exploit. So they're saying that this is the first example of an agent, and definitely not the last, giving cybersecurity defenders new tools to stop these threats. And we've talked about where agentic AI is going. Almost certainly, security is going to be an area that is close to a pure play on agentic AI. So I own several security stocks myself, in addition to Cloudflare, and I think it's some we'll be watching with the portfolio. But that was it. I saw this breaking right before we went to film it. It felt like one of those seminal moments where it's the first of a new era is happening.
Well, I love that. And, we've talked a lot about the potential of agents, and sometimes it can be hard to visualize what that looks like. And I like having a good example like this for people to see an actual application and use case of an agent out in the world, because it is still, I don't want to say it's largely a concept, because there are companies offering agents, but they're in a somewhat sort of walled garden experience right now. And it is hard for us to see all the ways that agents are being deployed until they get deployed more wide scale. So I do love that news. Eric, let's wrap it up here. I wanted to talk a little bit about your Investicon segment, and then let you go enjoy the Virginia humidity.
Yeah, we've got a segment rolling right after this, and I'm going to talk with Emmett Savage, who is the founder of My Wall Street. Emmett's a great guy, and he's put together an incredible event. It's happening August 21st in Dublin. I know that's not convenient for many people, especially on a month's notice, but we do have a lot of listeners in Europe and other areas where it is a short plane flight away. I'm going to be giving a presentation there. We have a pretty packed itinerary of things like how to collect whiskey and invest in that as an asset class, how to buy growth stocks that you wouldn't find in the AI portfolio, and balance a portfolio with things like ETFs. So I think it will be a tremendously fun day. It's an opportunity for people to talk with us. So we'll have a little preview of that if you're interested in hearing about Investicon. That's coming after this. And second, just I know I had mentioned at the start, but we are going to begin placing videos. Hopefully, at some point, we'll have on things like Spotify where you can actually watch the podcast itself. But just kind of a call, our YouTube channel has been something that has been very much in the background. We put the podcast up there, but it's a static image. We're going to start putting a lot more videos, not only from the AI Investor podcast, but also other content from 24/7 Wall Street. If you're listening to this podcast, I should note we're publishing every single day. We have over 10 live blogs covering earnings that are happening today on 24/7 Wall Street. We're going to start publishing more on video stuff. So if you really like what you're hearing on this podcast, going to 24/7 Wall Street, making that a place to get a lot of your business news is, we continue to invest significantly in that to make it a must-use resource for everyone who's listening today. So, Austin, with that, I think it's time to kick it over to Emmett and get the details on Investicon.
Thank you so much, Eric. Thanks for your time. Thank you to our listeners. And we will see you next time. Eric, I hope you have a fun segment with Emmett. And to our listeners, we'll be back in about 2 weeks.